All right, now confidence among small businesses in the U.S. declined in November to the lowest level in 4 months. This comes as no surprise to our next guest. William Dunkelberg, the chief economist at the National Federation of Independent Businesses, says the economy is growing below potential. Bill joins us now from Philadelphia. Thanks for coming on the show. Let me ask, first of all, about the confidence level. Why is that declining as we see so many other signs that the economy is recovering?
Well, we do see some signs that the economy is improving, but what we don't see, of course, is the consumer back out there spending, and that's the real key. So if we ask our owners, what's the most important problem facing your business today, 33% say weak sales. That's their top problem. Only 4% say financing, because if you don't have any customers, you don't need to buy inventory, and you're not going to expand your business, and you're not going to make capital expenditures you don't need to make. So, no need to borrow for that.
So it's not about credit.
Come.
I guess about 6 months ago, David Malpass was on the show saying small businesses need credit. That's the biggest problem in this economy. And then you started hearing it in front of Congress, and now you're hearing it from the administration. But you're saying it's really not a problem about credit for small businesses.
Well, we talk to our 400,000 member firms every month, and I think they look pretty much like the members, the firms that aren't members of NFIB, and they're telling us credit's not really the issue. Yeah, it's tighter now than it was in 2003, but it gets tight at the end of every expansion when you go into recession. It is harder to get credit. But there are always people, even in the best economy, there are people who aren't getting all the credit they think they should have. And the problem we have now is that, we built the economy from 03 to 07 on a zero savings rate kind of a deal. We built too many restaurants, too many strip malls, too many retail spaces, and now they're having trouble, and they want credit, but they're not good bets for bank lending.
All right, so Bill, if credit isn't necessarily the problem here, you mentioned weak sales. That's what the small business owner is saying. That's our problem.
Right.
I mean, what do we do to help these guys out? We know the small business owner is really kind of crucial to the economy and the turnaround.
Indeed, and what they really need to see is some customers, and then they have a reason to hire somebody and get some inventory, and that's not happening now. Nothing really that's been done since last January in the name of stimulus has really been stimulating the consumer. So on the one hand, there's nothing really happening to help their after-tax income increase. And the other core problem is that looking forward, all they hear is that Congress is going to put more taxes on them. And of course, that's not very encouraging for consumers either. So we see consumer sentiment fading kind of through the middle of the year and into the fall, just like we saw small business owner optimism fade.
All right, so Bill, that's what I asked you. I mean, so what should we be doing, or what does the government maybe need to do to help out these small business owners?
Well, one is to stop scaring them all to death with promises of higher taxes, mandates, et cetera, that make working harder not as profitable going forward. Another is to help the consumer get back into the market. When they start spending, then, of course, we'll get more cash flow. We'll hire people, we'll order inventory, and we'll look better to the banks if we want to get a loan. But right now, most of the small banks, at least, have a lot of savings on hand. I mean, the consumer savings rate is way up, hundreds of billions of dollars coming in, but we don't have lots of good applicants for the loans. It's a different world, of course, when there were no underwriting standards back in 07 and 06 and 05, especially for mortgages. Now, we're back to basic banking again.
Hey, let me ask you, nobody outside of Washington likes higher taxes, but the consumer's main concern has to be really jobs, right? And the administration right now is focused on that as well. How do you think the administration would best promote additions of jobs?
Well, again, the best thing to, for promoting jobs is to promote consumer spending. Then we have a good reason to hire, and that's not really happening out there. So if you offer me a jobs tax credit or a cheap loan, I'll say, well, that's nice, but why would I hire a $30,000 worker to get a $3,000 credit if the worker can't earn $30,000 or $27,000 to cover their pay? So I'm not going to hire anybody until I need to, and the need is going to be driven by more consumer spending. That's coming back gradually, but not real quickly, and a little stimulus there would probably be helpful.
In the form of what? Cutting us all a check, or?
Well, you could do that. You could cut. We've done checks. We've cut checks before. We also like marginal tax rate cuts. That is, let's not just do a one-time thing. Let's tell you that for the next year or even longer, you have lower tax rates, and that would be more encouraging. We also suggested a cut in the or suspension of the payroll tax, which would put more money into the workers' pocket and make labor cheaper to the firms. So
Bill,
some of those things would be helpful.
How can the government do that when, on the flip side, we constantly talk about this growing, ballooning deficit, so we're trying to manage that. I mean, how can we do that and cut taxes at the same time?
Sure. Well, look, it doesn't really make any difference whether you spend you borrow $500 billion to cut taxes, or you buy $500 billion to invest in green jobs in somewhere. Either way, the government's going to borrow $500 billion unless it cuts $500 billion someplace else in the budget. Not likely, but that would be the sensible thing to do. So really, a tax cut is funded by borrowing, and a new program to finance, cash for clunkers in the job market, job tax credit, or green jobs, that money's borrowed. So it's all borrowed. It doesn't really matter which way we go. Pick the one that gets the most stimulus for the consumer.
Okay, going to leave it on that note. Bill, thanks so much for finding some time for us. Bill Dunkelberg joining us from Philadelphia.